end of October, when I warned that we would get that pullback due to the Trump election and everything, it told me back then already that this probably might not be a long-term top at these $2,790, but just a short to midterm top. And because silver has not shown up to the party yet, so that's still missing. And I think it will come. Maybe it comes in the next few months until late spring, early summer. Maybe it takes a bit longer. But overall, I think the bull market is intact. It's a healthy consolidation we're seeing here. And my next price target is $3,100 roundabout.
Gold continues demonstrating strength in the precious metals market, trading near $2,670 after finding support above $2,600. Following its peak of $2,790, the metal has shown resilience despite a pullback to $2,535. Market analyst Florian Grummes maintains an optimistic outlook, projecting a potential surge to $3,100. Technical indicators support a cautiously bullish stance, with the metal maintaining its position above key moving averages. A notable development is the impending bullish crossover of the 100-day simple moving average above the 20-day simple moving average, though this pattern also suggests some moderation in buying momentum. In contrast, silver presents a different narrative. Despite recently trading at $29.70 per ounce with a 0.30% gain, it has notably underperformed compared to gold's impressive rally. This divergence, first observed in October, raises questions about the sustainability of gold's current levels. However, silver's lag might indicate a delayed but potentially significant rally in the coming months, possibly by early summer. Both metals' market sentiment is influenced by multiple factors, including upcoming U.S. economic data, notably the Producer Price Index. Additionally, concerns about potential economic impacts from proposed trade policies, especially regarding tariffs, have reinforced their appeal as safe haven assets. Both metals traditionally serve as inflation hedges, which continues to drive investor interest in the current economic climate. Silver's recent performance, marked by an 8-day winning streak before Monday's pause, reflects its safe haven status and industrial demand dynamics. The metal's dual role as precious and industrial metal adds complexity to its price movements compared to gold's more straightforward, safe haven characteristics. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Well, I think I expected a breakout above that long-term resistance at $2,070, and it happened with vengeance in end of February, and gold rallied to my first target, 2,535. Pretty much exactly at Beaver Creek, we reached that target. And overall, I think it behaved well. It performed well. It did everything that we expected, or that I expected over the last year. We've seen some multi-month consolidations, but overall, the uptrend was strong. And gold made a new all-time high at $2,790 end of October. And since then, it's basically consolidating. First, we got a big pullback down to 2,535, which has been the low so far. And basically, over the last 2 months, gold is going sideways, somehow in a triangle, consolidating that massive run higher over the last year. And it's been a very strong bull run last year. Silver has been a little bit lagging. I mean, it just mirrored the performance of gold, so to speak, but it didn't show real life on its own, which actually told me already in end of October, when I warned that we would get that pullback due to the Trump election and everything. It told me back then already that this probably might not be a long-term top at these $2,790, but just a short to midterm top. And because silver has not shown up to the party yet, so that's still missing. And I think it will come. Maybe it comes in the next few months until late spring, early summer. Maybe it takes a bit longer. But overall, I think the bull market is intact. It's a healthy consolidation we're seeing here. And my next price target is $3,100 roundabout. I think the technical charts are intact. We are seeing that the $2,600 level has held. I said that most likely the turning point, the trend change will happen around the last FOMC meeting in mid of December, and so far it happened. So gold recovered. The low came in at 2,585, and just last Friday it was nearly touching 2,700 again. Trying to break out of this triangle, it has failed so far. So there was a little bull trap on last Friday. Yesterday, gold came down a bit, but overall, the trend is higher. There's no doubt about it. Would take actually a low below that 2,535, which we've seen in mid-November. And then we could discuss if there is maybe a downtrend developing, but right now I don't see it. I think gold is holding that $2,600 support level, and it just might take another few weeks until it's able to break above 2,700, and then 2,720 is the next resistance. And from there, we will be quickly, most likely, testing the all-time high. So no, there's nothing to worry about. There is always apparently new buyers coming into the market, right, at these lower prices. So if gold drops to 2,535, it seems that it attracts enough buyers, more than sellers, that the prices can recover. I mean, in the end of the day, it's that simple. I think we heard that China is coming back to the market, buying physically. So the Bank of China officially announced it and presented numbers for November and December. So obviously that's an important driver. We know that this whole gold rally that started with the breakout, or let's say it started at the low at 1810 1.5 years ago in October 23. And this whole rally has been driven by strong physical demand out of China, from the Chinese central bank and some other emerging market central banks. And we also know that if we look at the gold ETFs in the Western world, that there's no real interest. There's not a lot of inflow. In fact, most of the last 1.5 years, we've seen outflows, while the gold price has been rising. So that clearly tells us there's not a lot of demand in the Western world. It's all coming from the East, from Asia, from China, from India, from emerging market countries.
Silver continues to face significant pressure as the gold-silver ratio rises, recently climbing above 89.50. Analysts suggest that if this ratio surpasses 90, silver could face additional downside momentum, reflecting its ongoing struggle to break free from gold's shadow. Despite this pressure, silver's long-term potential remains promising, with market experts like Florian Grummes highlighting the possibility of a breakout. A drop in the gold-silver ratio below 75 could serve as a pivotal signal, sparking an independent rally in silver. Currently, silver's technical outlook hinges on key levels. The momentum suggests a potential upside above the pivot point at $29.65. If buyers maintain control, silver could test resistance levels at $29.85 and possibly $30.05. However, a downside break below $29.60 would favor sellers, pushing prices toward the support at $29.42. Breaching this support could invalidate the bullish thesis, with declines extending to $29.20. Let's get back to the interview.
Well, I mean, the gold-silver ratio is an important tool to analyze the precious metal sector in itself. If gold is so strong in comparison to silver, or silver is just following gold like it is doing now for the last 2 years, basically, it's not so important, I would say. But then again, you look at it and it gives you some insights or hints, like what's the next direction of the whole sector probably. Right now, I don't see any important signal here. I mean, from a fundamental perspective, we know that there's 10 ounces of silver in the ground for each ounce of gold. So a ratio at 90 is completely far away and disconnected from the reality in the earth. But that's what the market is playing right now. And I think it just shows us that silver is still very much undervalued here and has a lot of potential to catch up to gold. I don't see any important signals right now, but I think once the gold-silver ratio would fall below, let's say 75, that probably would be the trigger for silver to really kick in and do its own thing and rally hard. So the daily gold price movements, I mean, I have so many people always questioning me, what's going to happen with the gold price? What's the next move? Where are we going? And that's a daily call, so it's obviously a short-term time frame kind of thing. But it helps you to keep the perspective. And as you can see, I mean, we have a triangle movement over the last 2.5 months, nearly 3 months, since gold topped out at $2,790. And the daily call basically gives you the support and resistance levels. It gives you a price action, what to do, or ideally what not to do. So that's actually even better because most of the time it's avoiding mistakes that will help you to become more successful. So it gives you a bias. Above that level, you would look for bullish scenarios. Below that level, you would look for bearish scenarios. And it keeps you up to date with the gold price. You see the most important levels. You see that as I just said before, we had this little bull trap on Friday. Gold tried to break out above this upper boundary of that triangle, and it failed. And here we are on Tuesday, trading nearly $30 lower than Friday's high. And so it tells us we're still in that triangle. It also tells you that the downside is most likely very limited. Yes, we could test 2,620, which would be the green, the lower boundary of the triangle. Absolute worst case, remember, before any big rally, usually that tends to be a bear trap. So that means you get a breakout below and then quickly price is reversing. And everybody who in panic sold because there was some support violated basically finds itself standing at the station and the train is leaving, right? So actually that's happened yesterday in the Bitcoin chart, by the way. So you had this dip below 90,000, and here we are not even 24 hours later, and Bitcoin is trading at 96,000, nearly $7,000 higher. And that happens very quickly. You can be sure, like, people panicking, throwing in their positions, and then the market turns around violently. And that's somehow a pattern that I see over and over again, especially in that environment that we are in now, which I think is still a cracker boom, right? But for the gold price, we have this lower boundary, let's say 2,620. Maybe we see it again. That would be still healthy. Maybe even a little bear trap, 2,600. But I don't see much more downside here. And I think it's just a question of a few more weeks before gold will break out of that triangle.
The evolving dynamics in the precious metals market reflect a delicate balance of safe haven demand, industrial applications, and technical patterns. Gold's steady performance and silver's nuanced trajectory underscore the importance of closely monitoring key levels and market indicators. As these metals navigate economic uncertainties and shifting ratios, their potential for long-term gains remains intriguing for investors. What strategies do you think investors should consider when balancing the dual roles of precious metals in their portfolios amid current market conditions? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.